What's up, everybody? This is Dominique Henderson, founder of DJ's Capital Management, and we are here with another office hours. So, we want to get right into it like we normally do to try to give you, I would say, a couple of tips for your financial strategy because things are not always as easy as they seem. And when we start to think about what we're going to be talking about today, which is taxes, specifically how to beat the IRS tax code. Now, this would seem to be one of those topics that you're like, Dominique, I don't know if we want to talk about this. It can be pretty complicated. And the question is it supposed to be really complicated? Why are there so many pages of the tax code? Why do we normally outsource this? Because we don't want to do it. I think it boils down to a couple of things. The first is going to be the framework by which taxes are collected is kind of convoluted, right? And I think the second thing is we don't really understand all the deductions and credits and what is goes over here on this side of the formula and everything. So I was like, why don't we just break down the formula? Why don't we talk about what the formula is today and let you feel a little bit more comfortable about how you come to, or how the IRS comes to your tax liability and gets to that taxable income number, and you get either a refund or you have to do some type of payment. So that's what we're going to talk about today. And I don't know if this is going to all the platforms that we're normally on. I will make sure I get it posted if it is not. Technology is what it is sometimes. All right, so let's get it cracking here on a Friday. Happy Friday, everyone. I didn't do that. Okay. So here we go. In 5 minutes or less. The formula, I think, is the first thing to kind of be aware of. So you got to know the formula, and if you want to beat the IRS tax code. Now, I did read something recently about they are something like 35 million returns behind, which is just ridiculous. I don't know how true this number is, but I do know even my own, I filed on time, and I still haven't received word about whether or not it's been accepted. So maybe they are falling a little bit behind. But regardless of that, how do you beat the tax code? Well, I think you need to know the formula. So let's go through that. And then what we'll do in the next couple of weeks is we'll start to dive in a little deeper on this similar subject of taxes. And I can kind of show you some things. I'm actually working on an article. Leave your information down in the show notes or the comments, or send me a DM, and I'll make sure you get that article when I finish it up. But we'll go into some strategies that you can use possibly for your situation. So the very first part of the formula is going to be the following. It's going to be this little graphic here, which I borrowed from the IRS's website, right? So at the beginning, it's income, we have all our income from every source, all W-2, 1099s, all this stuff, right? And you go through all that, and then you adjust your income. Then we got deductions, tax credits, and results. So that's the high level. Let's dig into these just a little bit more in the time remaining, okay? So the very first thing is income from all sources. So Dominique, what does this include? It includes income from all sources. There is not too many exemptions on this. I mean, it's everything. That's why you'll see in a little bit later down in the formula, you get to adjust to your income, and you get to deduct from your income. Okay, so you got to start with everything, though. You can't scrimp on what it is there. So income that came to you, if it's under the table, that's a whole different topic. But if it's W-2, if it's 1099, if it's reported to the IRS, you want to include it. Okay, then we're going to take adjustments to that income. So things like adjustments to your income may be the fact that you have, let's say, $150,000 that you make. However, you contribute 15% or 10% or whatever to your 401k on a pre-tax basis. Well, that's going to adjust your income. So the IRS does not see the 150, they see the amount after you take your, make your contribution to your 401k plan or your retirement plan. So retirement plans is one way to reduce or adjust your income down. Student loan interest, depending on how much money you make. There's qualified educator expenses. There's a whole list of this stuff. And I don't want to get into everything here. Another thing that you might want to do is health savings accounts, right? moving expenses, things like that. Okay. Then, oops, sorry about that. That gives you what is called the adjusted gross income, or the line, right? You ever heard of above the line and below the line? What we just went through are above the line deductions. These are the most, I guess, sought after because they directly reduce the amount of income tax you're gonna have to pay dollar for dollar. Then after you do the adjusted gross income, you have to do deductions from income. Now you can either do the standard deduction, which has been raised in the last couple of years, and it benefits a lot of people just to take the standard, or you can itemize deductions, right? So things about like, mortgage interest or real estate taxes, which has been capped until 2025, until the sunset of the new tax law. You got charitable contributions, a lot of different things there, medical expenses, depending on how much money you make again. And then from there, oops, sorry again, you get taxable income. Now, this is the number that goes against those tax graphs and whatnot to see the tax tables to see what exactly you are owed or due, rather. That after we get taxable income, we're going to apply tax credits or payments, right? So you think about if you've been doing estimated quarterly payments or something like that, or if there's some type of tax credit that comes out that you can then apply for, all that kind of stuff then goes against whatever your taxable income times that number in the table gives you what you owe in taxes. Apply your taxes and credits or payments to that number, and then that's going to leave you with either a refund or a payment, right? That's how that works. That's the whole formula, and it's not really that complicated. So then you can start to think about, okay, do I have anything that's above the line or below the line that makes sense that I can be deducting? And then you kind of concentrate on those particular areas. That's, kind of tax strategy 101, okay? So hopefully that's been helpful. Like I said, for the next couple of weeks, what we'll do is talk about taxes. We're going to dive into some software that I have, and maybe a free offer for you. Just stay listening. And I think this will be really, really helpful as we're rounding out this year, going into the fourth quarter. That's a time to be thinking about your different deductions and the ways you can lower your tax liability, not after the year's over. Okay? Have a great Friday. We will see you later. Talk to you soon. Bye-bye.